Thank you very much, Olaf. Can we do what Olaf has suggested, and can I work round, and if you can each say what, if there is anything that was different before, what it was, and what is now happening going forward, and we can then start discussing it. And I don't mind, rather than taking the proper chairman's view, if people want to interrupt and talk, I think that's the way to get a free discussion. So, shall we start with you as you're sitting next to me?
Thank you, Geraldine. And apologies for being late, by the way. I'm sorry I didn't say that earlier. We've been doing a lot of work about this in the fund management industry, as Olaf, I'm sure you're aware. Quite specifically because we're not sure how much of us is covered by the regulation that's contained in the EU directive. So, does fund management fall into the interpretation of banks? They've been quite loose in their discussion, quite specifically, if it does, what bits of it do. But at the same time, we're also hearing that some of the investment management firms that are subsidiaries of larger banks are beginning to see base pay rises. So it seems to me that the behaviour, the outcome of some of this talk about variable pay must be deferred over long periods of time, it comes down to being all about remuneration, and what people are doing is sticking their hands up saying, well, if they're going to defer my variable pay, then I'll just have a bigger base salary. Thank you very much indeed. So we've heard quite a lot about, it's certainly within the investment banks, very substantial rises in base pay levels, and some of that is beginning to seep out into the investment management industry, quite specifically at very senior levels where those fund management firms are parts of the investment banks. So that is becoming a real issue for us, because of course if base pays are rising, good for you. But it'll be good for the headhunters, but it's not going to be very good for our business model, and it is a real concern. And frankly, it's not the outcome that was intended by this regulation.
I have to give a little bit of background. I work for the Government Actuaries Department. We're the only public sector consultancy, which means we're not for profit but self-funding our chargeable income. As a consequence, we can't bump up our salaries because the taxpayers' money, which makes competing with private sector consultancies a bit harder times. Before the crisis, people would come to GOD for work-life balance. We've got flexible working times. People can start up to between 7:30 and 7 o'clock, and then can leave between 4 and 7:30. It's quite nice. They can take 2 days time off in lieu in a 4-week period. We've got 3 weeks paternity leave, 9 months full paid maternity leave. That seems to be working quite well until then. Now, we've got the civil service bar recruitment freeze, so if anybody leaves, we can't recover. And there's a problem of now with the inflation, tax increase, if people get poached by competitors and we can't match the salary, we have to look at other ways. So what we currently have in terms of work-life balance is not going to be sufficient. So as you say, it's all about employee engagement, looking at...
That means you're basically forced to do more employee engagement because you don't have the choice in rising base salaries, whereas in the private sector there is this, but it was other issues which was not intended to have a high base.
I have a really interesting kind of perspective on this. I had 20 years in the fund management business running equity portfolios, dealing with asset managers and investment bankers, brokers, whatever. And now going over to the Daily Mail on the client side, they're almost like chalk and cheese in a sense, because coming from the city, one of the issues that I would identify is that effectively how many people working in the city actually identify with their organisations and actually want to be there for all the engagement issues. They really feel they want to keep working for their own organisation, therefore prepared to do this, or are they effectively mercenaries, I suppose, taking as much money as they can, and if you're not getting remuneration here, you just go somewhere else, because effectively it's what's up here that makes you valuable as a commodity, arguably. sometimes clearly there's the employer's presence in the marketplace and brand and distribution and all those things. But ultimately, do people want to feel they belong to Schroders, belong to Insight? Or do they want to be the best UK equity portfolio manager they can be, on top of the performance tables in the fund universe? So that's kind of one side. And I get to Daily Mail and I'm working in the pensions department, and there are a couple of people there that have been working for the business for 30 years, and they live the Daily Mail. Now some of that's because it's still this funny, almost family-controlled company, the funny voting structure, the royal minister effectively owning and running. But there's a real, there's a real longevity there. So and a lot of these people aren't paid huge salaries, but they still feel that they belong. So for them, it's a completely different mindset. And I mean, for me, I think this is, this gets to the nub of the issue. Because if you're sitting in a chair thinking, right, my prime motivation for this is all about effectively enhancing my personal brand in the marketplace, and two, my personal wealth. Actually, I'm not that fussed about the corporate environment I'm in to do it. That's very difficult, I think, to if you're going to defer my pay for 5 years and the guy down the road's going to defer it for 3 years, then I might think about moving. And equally, if you're going to push up my base pay, that's great. Because when I move somewhere else, I could just bump it up again, and effectively, it's almost risk-free if you do that. So it's kind of a whole load of issues here. You come back on variable and fixed, and the risk and the alignment. But I think it's all about how much you want to be where you are, and how much this is transactional, and how much this is kind of long-term relational, I suppose, and identity and loyalty, and the city is quite problematic on that basis, I think, in terms of you're almost driven by what the competitors are doing down the road, because some of it's due to the employer. The employers, it's a gross generalisation I know, tend to be not particularly loyal to their staff, so easy, personnel being the biggest cost in the business. You need to reduce costs, you get rid of people, so it becomes more transactional on both sides. Companies aren't loyal to their staffs particularly, staffs aren't particularly loyal to their employers. And once you get into that position, it then does become all about retention. So I don't know what the solution is, but I'm a bit worried from an economic perspective about pushing up the fixed elements of pay as opposed to variable. And personally, I'm quite comfortable with deferred bonuses, much more alignment, because that's ultimately what you want. You don't want somebody who's sitting there taking huge risks on the back of, well, it's a one-way option. If it works, I get a lot of money. If it doesn't, well, I don't really lose anything. And in a sense, I don't particularly care if a hedge fund commodity trader causes his hedge fund to fall over. They've got a pot of money. It's unlikely to provoke a systemic reaction in the marketplace. It's very different if a commodity trader within Barclays Bank, say, risks bringing down the entire bank and requires government support. So, in a sense, I can see where a dividing line is not inappropriate. So, I'm sorry, I've touched on a whole load of issues there.
Just touch on this one point. Maybe I did not so good example. I should have maybe rather compared like football players versus investment bankers, because what I wanted to say is the coverage of the regulation is too limited. It should be broader, and it should address more areas, not just one element. Anyway.